The most dangerous predator online right now isn't a hacker. It's AI. A salesman using a sleek website, a revolutionary AI chatbot, and the promise of a risk-free returns to separate people from their life savings. Over $300 million has been siphoned from ordinary people this year. This isn't a movie. This is the modern Ponzi scheme. Stick around to the end of this video to know exactly how to spot one. Sarah was smart. She worked hard. But like many of us, she was stressed about money. One day, an ad popped up on her social media feed. It was for something called Quantum Trade Bot. Let our algorithm do the work for you, it said. Set it and forget it. Zero risk, guaranteed income. Sarah was skeptical. Who wouldn't be? But she did some digging. She lands on Cloud9 Capital. The website was beautiful. It had real-time charts showing massive profits. There were pages of testimonials with photos of people just like her talking about quitting their jobs. There was even a live chat agent named Alara. She typed, "Is this real?" Alara instantly replied, "Absolutely. Let me help you get started." They were so helpful. So Sarah took a chance. She invested $500 just to test it. And guess what? It worked. Her account grew every single day. She withdrew $100 just to see if it was real, and the money landed in her bank account within hours. She was ecstatic. This was it, the answer. She told her sister, a nurse. She invested too. She poured in her $10,000 savings. Her account ballooned to what looked like $80,000. She started dreaming of a new car, a vacation, a down payment on a house. But behind the scenes, Vincent Mezzotta, aka Vincent Midnight, and David Safran run the scheme. They use fake identities, Delta Prime, Director Vincenzo, and create a sham agency, the Federal Crypto Reserve. When investors worry, they charge fees for FCR investigations into their own fraud. Months later, she clicked to withdraw some of her profits. The status just said, pending, for days. She went back to the live chat. Alara said, "Hi, Sarah. There's a standard 14-day administrative hold for larger amounts. It's in our terms. We also need a 10% liquidity fee to process it now. It's to protect other investors." A fee? A hold? This was new. Panic started to set in. She went online and searched Quantum Trade Bot withdrawal problem. Her heart sunk. She found Reddit threads. Cloud9 Capital is a scam. She found a community of hundreds of people just like her, all locked out. One user had done a Google reverse image search on the CEO's photo. It was a stock image from Shutterstock. One user traces their Ethereum wallet. Money flows to Mezzotta's personal account. It was just being moved out and cashed. The AI wasn't intelligent. The profits weren't real. Sarah's life savings were just gone. IRS investigators uncovered $13 million stolen. Mezzotta pleads guilty, 10 years in prison for money laundering. His partner destroys evidence, an iPad, a safe, but fails. Investors lose everything. Sarah's story is real. It's happening right now, thousands of times over. But how does it work? And how can something from 100 years ago help us understand these modern crimes? Stick around, because we're going back to the very first Ponzi scheme to expose the simple, brutal trick that still works today. And we're going to show you the 5 red flags you must look for so you never become the next Sarah. This is the story of the oldest trick in the book and why it's more dangerous than ever. So let's rewind the clock, all the way back to 1919, Boston, Massachusetts. The world was rebuilding after a terrible war, and people were desperate for a bit of hope, for a shortcut to a better life. And that's exactly when a charming Italian immigrant named Charles Ponzi saw his opportunity. His idea sounded brilliant, simple even. He claimed he could make a fortune from something called international reply coupons. These were basically coupons you could buy in one country and exchange for postage stamps in another. He promised to double your money in just 90 days, an unbelievable return. People went wild for it. It wasn't complicated like AI, but it sounded like a clever, sophisticated international loophole. Early investors got their money back, plus the huge profits he promised. Word spread like wildfire. Everyone wanted in. Policemen, teachers, shopkeepers, politicians, they all poured their life savings into his company. He made millions. Here's the brutal truth. There was no sophisticated trade. He wasn't buying up millions of these. In fact, investigators later found he had only bought about $30 worth. So where was all the money coming from to pay those incredible returns? It was coming from the new investors. The money from people who joined in March was used to pay the people who joined in February. The money from April paid the people from March. It was a simple con game. He wasn't investing anything. He was just moving money from one person to another, taking a huge cut for himself. And just like our modern quantum trade bot, the entire thing relied on one thing, a never-ending stream of new investors. The second that stream slowed down, the whole house of cards was destined to collapse. And it collapsed. A Boston newspaper started asking questions. Where was all this money really coming from? The authorities got involved. People panicked and tried to pull their money out all at once. And there was nothing there. Thousands of people were ruined. Charles Ponzi went to prison, and his name became forever attached to the scheme he didn't invent, but perfected. Now, think about Sarah's story. Think about Charles Ponzi's story. Technology has changed, but the core mechanics are identical. A promise of unbelievable returns, a complicated story that sounds smart but is hard to verify, early payouts to build trust and attract a crowd, and then the inevitable, devastating crash when the music stops. The reason these schemes still work after more than a century isn't because of technology. It's because of something much older, human nature, our hope for a better tomorrow, our trust in a friendly face, and sometimes our greed. That's the engine that has powered every Ponzi scheme from 1920 to the crypto schemes of today. But what if you could see it coming? What are the specific words they use, the specific tricks they play? In the next part, we're breaking down the 5 undeniable red flags. These are the patterns that appear in every single one of these scams, from Boston to Bitcoin, and knowing them is the only way to protect yourself. Let's break it down. After studying hundreds of these schemes, from Ponzi's day to our own, 5 glaring red flags always appear. If you see even one of these, walk away. If you see 2, run. And if you see 3 or more, what you're looking at isn't an investment, it's a crime in progress. Red flag number 1, the promise of guaranteed returns. Let's be crystal clear. In the real world of investing, there is no such thing as a guaranteed high return. Risk and reward are inseparable twins. The higher the potential reward, the higher the risk. Anyone who tells you differently, anyone who promises you a specific high percentage return daily, weekly, or monthly is lying to you. They are either a fool or a fraudster, and you should not give your money to either. Charles Ponzi guaranteed 50% in 45 days. Quantum TradeBot guaranteed 2% daily. It's the same tired, impossible promise. Red flag number 2, a complex or secretive strategy. The story is always designed to sound impressive, but be difficult to verify. Ponzi talked about obscure international reply coupons. Modern scammers hide behind buzzwords like algorithmic arbitrage, AI-powered trading bots, or quantum computing. They'll say their strategy is a proprietary secret that can't be shared. This is a deliberate wall to prevent you from asking simple, logical questions. If you cannot understand in simple terms how your money is being made, then you should not invest it. Legitimate professionals are happy to explain their process. Red flag number 3, unregistered or unlicensed sellers. This is one of the easiest checks to perform, and yet so few people do it. In most countries, anyone selling investments must be licensed with a financial regulatory authority. In the US, that's the SEC. You can go right to the SEC's website and check. I'll put a link in the description below. If the person, the company, or the product isn't registered, that is a massive, flashing warning sign. They're operating outside the law, which means you have virtually no protection if it all goes wrong. Red flag number 4, pressure to act now.
Scammers manufacture urgency. They'll say the offer is closing soon or that you'll miss the ground floor opportunity. They'll tell you that other people are getting rich and you're being left behind. This is a psychological trick designed to short-circuit your critical thinking and push you into a decision before you have time to do your research, talk to a spouse, or consult a trusted advisor. Legitimate investments will still be there tomorrow, next week, and next month. There is no hurry. Red flag number 5. Issues with paperwork or payments. This is where the cracks start to show. Unexplained fees, delays in withdrawals, confusing statements, or errors in your account. If you are ever told you need to pay a liquidity fee or a release tax to get your own money out, you are being scammed. If your withdrawal is stuck in pending for weeks with excuses about administrative holds or verification processes, you are being scammed. These are all tactics to stall, to frustrate you, and to hold onto your money for as long as possible before the whole operation vanishes. Knowing these red flags is your first and best line of defense. Remember Sarah? Her story hits every single one of these points. The guarantee, the secret AI strategy, the unregistered company, the pressure from the live chat agent, and finally, the issues with withdrawing her money. The blueprint was there all along.